Hey everyone, mega cap tech stocks have performed strongly in 2024. More specifically, Microsoft has outperformed Apple, and investors are asking if it's time for Apple to play catch up or if they should stick with Microsoft, and deciding which one is the better buy today, Apple stock or Microsoft stock. I'll answer that question in this video, comparing the two giants on revenue, on profitability, on cash flow, on return on invested capital, looking at their forward prospects going through the next 5 years, and finally comparing that all against their valuation to come to the conclusion of which one I think is the better stock to buy today. So let's get started with the revenue.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Of course, Apple has been hearing a lot about its lack of innovation lately, and it's showing up in its lack of revenue growth. You could see Apple here in the last 2 years or so has bottomed out in terms of revenue growth, has flatlined here at 381 billion in trailing 12-month revenue. You could see that orange line relatively flat here in the last couple of years. Meanwhile, Microsoft's revenue growth has continued strongly, and the company has increased to 236 billion in revenue over the trailing 12-month period. At this pace, Microsoft would catch up to Apple over the next several years. However, there is likely more innovation coming out of Apple in the pipeline, the company announcing that it will have some big release regarding an AI enhancement that we haven't yet seen from Apple. We've seen all of these major tech companies come out with enhancements through artificial intelligence. Apple has been the notable company that's missing here in terms of a major upgrade using artificial intelligence. Undoubtedly, Apple has been working behind the scenes to develop something. We just don't know what that is yet, and investors are eagerly awaiting Apple's release of an upgrade using artificial intelligence. Microsoft, meanwhile, already benefiting from enhancing its suite of products with its large language model coming from its investments in OpenAI and ChatGPT. Now, looking at operating profit margin, Microsoft has leapfrogged Apple, expanding its operating profit margin to 44.7%, nearly 50% better than Apple's operating profit margin of 31% in the most recent trailing 12-month period. Looking ahead, analysts on Wall Street expect Apple to increase its earnings per share by 11% over the next 5 years, roughly in line with the growth of the S&P 500 earnings per share expectations of 11% in that same time. Analysts are more optimistic about Microsoft's earnings prospects, forecasting 16.2% earnings per share growth for Microsoft over the next 5 years. Now, one area where Apple does have the advantage against Microsoft is the return on invested capital at 57% versus 30% for Microsoft, and Apple is expanding this lead considerably. Apple has been returning significant sums of capital to shareholders, recently announcing a greater than $100 billion share buyback. And so as it's shrinking, when it's returning capital to shareholders, right, it's shrinking its asset base. That's cash, which is an asset leaving the company, going to shareholders. So the company is becoming smaller in terms of total assets. That reduces the load on the company to generate profits because it's now smaller. So investors don't require as much return because it's a smaller company, right? You would expect a restaurant that has one location to generate smaller profits than a restaurant that has 10 locations. I know that's a very simplified example, but I'm trying to elaborate on what return on invested capital means for investors. It's how much profit a company earns on the capital that it uses from investors. If you use more capital, investors want more return. If you use less capital, investors require less return. And so that margin improves if you shrink your capital base to a level where you can utilize more effectively. If you're using too much assets and not generating enough profit, that's a sign of inefficiency. And in a world of competitive investing that shows up here with the ROIC, with Apple being significantly ahead of Microsoft. Now, if you look at cash flow from operations to sales, Microsoft has done a better job than Apple in this metric, similar to how it's done better in its operating profit margin. But if you use more assets, if you spend more money on assets and build a larger asset base, then you could be able to generate stronger cash flow from your sales because you're investing in longer term assets. That reduces your variable costs per unit and thereby generates greater profit per sale or per segment, per product that you're selling. Microsoft doing a good job with this, 46.55% compared to 28.97% for Apple. Both are excellent metrics, but Microsoft much better than Apple in this regard. And improving. You can see Microsoft improving over the years, whereas Apple has been relatively stagnant in terms of its cash flow from operations and its revenue. Finally, I wanted to compare these two on their valuation, and as expected, Microsoft is trading at a more expensive valuation given its better performance in recent years. It's trading at a forward PE of 31 compared to Apple's forward PE of 26. Now, this is a close decision for me. It's not an easy one to make because Microsoft is ahead in revenue, in profitability, and in cash flow, whereas Apple is ahead in return on invested capital, and Apple is trading at a cheaper valuation. Microsoft has already given its thrust forward in terms of its AI enhancements, its artificial intelligence technology enhancements, whereas Apple has yet to come out with that product. And they're working on it. They're spending billions of dollars in research and development. And they've shown evidence, they've proven to investors that over the decades, they can innovate and they can innovate effectively. But in recent years, they've just been more cautious with their releases. So they've got something that we don't quite know what they're working on yet. And that could provide a boost here for Apple going forward. And given their success in the past, investors can be reasonably confident that they're going to be able to launch something that's going to be effective using artificial intelligence. The greatest area I think that could use help is in the iPhone, and the assistant inside the iPhone, the Siri, can use a major upgrade, but that remains to be seen. So even though you can be reasonably confident with that, still, if I had to pick one of these two mega cap tech stocks to buy today, I would pick Microsoft because of how well it has performed in recent years, how successfully it's implemented artificial technology into the business, and the improvements in profitability and cash flow and the competitive advantages throughout its business segments. Thank you for watching this video. I truly appreciate it. I know there's a lot you could be doing with your time and a lot of other videos you could be watching. So I truly appreciate that you chose to watch this one. If you want to see more videos just like this, hit the subscribe or the like button. They'll both help me make more videos just like this one. Thank you again.